And welcome, it's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. And we certainly had a very, very bumpy period last week. We have a lot to unpack. We are, as always, going to take a look at the broader markets and then drill down beyond that. We want to be really on top of some of this rotation that's beginning to take shape, and also some of this news-driven price action in the markets as well. Let's get started by talking about some of last week's. It was a very heavy data week. We did hear from the Federal Reserve on Wednesday that they are keeping interest rates intact. That was not unexpected. And also the fact that inflation is still something that is concerning for the Federal Reserve. Now, today we did get very key inflation data, PCE, and it showed that inflation had ticked higher. So not great news for those that are following interest rates, although we did end the week fairly flat. We'll get into all of that. And then also we did hear over the weekend, and it tumbled into the markets on Monday, a Chinese company that is AI related that claims that they have an ability to compute and do AI activities much, much less expensively than using NVIDIA's chips, for instance. We'll get into that and the impact on the markets there. And then also we did get January employment data. Actually, that is due next week, but we did also get GDP numbers. They came in a little light, but the economy is still in very, very good standing there. And we also today heard regarding tariffs. Trump did mention February 1st. And in fact, tomorrow, 25% tariffs against against Mexico and Canada, and 10% against China. So lots of uncertainty just out there in the markets. We did get earnings reports from several large M7 stocks. We'll get into that as well. And then next week, of course, we have two more M7 stocks due to report, Amazon and Alphabet. So let's go ahead and take a look at these broader markets and see where did we close for the week. And we have a daily price chart of the S&P 500, and we did end the week down a little less than 1%. This is that drop on Monday that I spoke to, and you can see that we were able to recover certainly a good part of that, and we are now back up above this key 50-day simple moving average with a positive RSI and a positive MACD. So good news there. We're going to take a quick look at that equal weighted S&P 500, where those M7 names are not quite as impactful. And you can see very much sideways price action here. So that M7 drop, those bigger names did not impact the equal weighted. Good news there, but certainly there was damage done last week in those tech names. We are going to get into that. I did put out a Monday alert report, very detailed, on names that were on our list that were impacted by the big drop on Monday and how to handle those trades. We'll get a little bit into that today. But from here, let's go ahead and take a look beneath the surface of the markets. And we're looking here at the 11 underlying sectors in the S&P 500. We have that 2-month daily price chart view sorted by that RSI in descending order. So your stronger relative sectors are up here at the forefront, and you can see the S&P 500 is residing down in this lower quartile. These groups up here at the forefront are generally outperforming the S&P 500. So one area that I did want to focus on today, we talked about it last week, was this continued move into healthcare stocks. This is XLV. Group was the top performer this week with a 2% gain. We'll get into where that strength was, and also I'll share with you some compelling names in that healthcare space that are really beginning to firm up. Other areas of note here last week, XLC. Now that's that communication services, internet related grouping. A lot of this having to do with Meta's nice earnings report. The stock traded higher, 6.5%. And we will get into that again later as well. And looking at some of these weaker areas, you want to be aware of areas that in this case had been up at the forefront for quite some time, and then this over the last couple of weeks has been deteriorating. This is XLE, the energy ETF, and I talked about tariffs. Energy stocks are companies are expected to be the most impacted negatively by these tariffs. We also had several major energy companies come out with earnings that were not quite as expected. So you can see XLE now in a downtrend, negative RSI, close below each of these key moving averages, and heavy volume on today's 2.8% decline. So some of these other areas that you will want to be on top of are technology, the heaviest weighted industry group or sector in the broader markets. And you can see that this sector is struggling. Apple came out with numbers. They were not as good as expected. You can see that the overall group here is beneath this 50-day simple moving average, which is now trending downward. So when we do see that begin to take shape, that 50-day simple moving average is the red line. And you can see here when it does begin to decline, it creates a rather heavy pattern, certainly for this sector or any sector really to overcome. So net technology is a little bit dicey. There are some bright spots remaining in this area, but certainly among those heavier weighted names, weakness persists. So from here, let's take a look beneath these sectors. We want to get a sense beyond the broader sectors where that strength relative to weakness is taking shape. I talked about healthcare, and up here at the forefront remains the medical devices ETF. This is IHI. Standard pullback today. We certainly are in an overbought position. Let's take a look at another area in healthcare that is definitely worth taking note of. This is IBB. Not a sharp advance. It was up a little less than 1% this week. We are still below this key 200-day simple moving average. However, our momentum indicators, this is the RSI up above 50, and then also that MACD now up here in positive territory. It's an area that I am keeping a very close eye on. We will share with you some names. AMGEN is due to report numbers next week, other names as well. So moving through, I did want to share with you IGV. Now, this is the software ETF, and the group was down about 1%. We can see it does still have a positive RSI and a positive MACD. There are some bright spots here. Again, earnings driven primarily. And moving through, I did want to have you aware that semiconductor stocks were the worst performing. They did end the week down 5.3. They were able to regain some of their losses on Monday. This area was most heavily impacted by the DeepSeek news as far as capabilities and chips and the ability to have that AI capability in very expensive chips. But jury is still out as to whether this is real or not on that DeepSeek as far as the capabilities. It so far has not been proven to be as good as AI capabilities among the mega cap companies here in the US. So let's go ahead from here, take a look at those FANG stocks, or M7 as they're now known. And I'm going to take a look at some of these companies that came out with earnings last week. Now, we talked about these going into their reports. This is Meta Platforms. You can see this nice base breakout. When you get that advance, a sharp advance in a particularly large cap company, you'll see that the price is pretty far extended above that 10-day simple moving average. Oftentimes, it can be really quite helpful to go ahead and add a 5-day simple moving average, and that's that blue line. It will act as a guide for potential buy points, pullbacks to that 5-day simple moving average. Look for an area of precedence on an uptrend here, but you can also see that momentum shift when you have a large expanse between the red and black lines in the MACD, that red line being that signal line. Now, we are in an overbought position here with Meta. However, you can see historically that it can remain above there. The point at this juncture is not to know that you are later in that advance out of that base breakout, but still quite constructive looking. And moving through, taking a look at some of these other names that also came out with numbers last week. Tesla, a bit dicey here. You can see the stock is in a period of consolidation. The stock was down a little less than 1%. And we are really seeing a lot of wobbliness in its near-term momentum. I would need to see this MACD black line up through the red and get that lift off on that RSI before being interested again. Also, I talked about Apple coming out with numbers. The company, they did originally rally. They were better than expected on their earnings numbers, but you can see that we ended the week the day today down about 0.5%. So this particular stock at this time is now trading back below this 50-day simple moving average. We do have that black line up through the red, but we have a negative MACD and a negative RSI. So weakness may persist in Apple. Now, certainly one of the hardest, absolutely the hardest hit in these M7 names was NVIDIA. Let's take a look at a daily chart here. The stock had this huge gap down on Monday, and since then it did have a relief rally on Tuesday. A lot of that was attributed to individual investors buying the stock on the dip, but since then the stock has wavered and we are seeing it close back below this 200-day simple moving average. Super high volume on that gap down on Monday, and we now have negative RSI, negative MACD, so we're not looking constructive on NVIDIA yet. Definitely has more work to do. We'll see how next week's earnings and reports of spending on AI come from companies such as Amazon with their AWS product. Going into their numbers next week, you can see we had this nice base breakout into an uptrend. It's sitting up here really quite nicely with a bullish RSI and MACD. In addition to their earnings, critical to investors is going to be their mention of their spending on AI related activity going into this year. That's the type of news that is and could potentially help stocks such as NVIDIA get back on its feet. So from here, I'm going to take us to the S&P 500. And what we are going to originally look at here is this wonderful 2-month daily price chart candle glance view sorted by that RSI. So we are looking at the overall S&P 500. We are going to look at another view as well. And first up, what I did want to highlight is looking at this time, IBM is the top relative performer, and then followed by Visa, Starbucks. Now, of note here is the fact that each of these companies have come out with earnings. So it is earnings driven. And also of note is that it is a nice diversification. We're not seeing a ton of any one area. We do have, of course, IBM technology, and they did relate it, this big gap up and strong earnings to AI related income. Visa, of course, payment processor. Starbucks came in. They also had a bright outlook for this year. And that, of course, is a retail restaurant name. Now, BSX is due to report next week. But again, moving through, you'll see Meta Platforms, Roper Technology, JPM, all of these companies have reported earnings over the last week or two, and they are coming on really strongly. So FFIV reported this week, gap up. Point here is, again, to emphasize how important earnings are as a driver of price action, certainly on the plus and on the negative side. Let's take a quick look at Abbott. This stock has been in a really sharp turnaround, nice high volume here. This is one of those big pharma names. I talked about healthcare being quite strong. Now, from here, I'm just going to drill us down to the bottom of the S&P 500 because, as always, you want to be aware of where that weakness is. And what does crop up here is going to be, I talked about energy stocks moving lower, OXY, OKE, and then also we can see other companies that are gapping down, and a lot of this is again going to be earnings related as well. So again, moving those stocks in a very large fashion is going to be earnings. Let's go ahead up and take a look at performance last week so we can view the S&P 500 and take a look here at the performance, which you can then sort by various time periods. What I'm going to do is share with you that 5-day view. And again, up here at the forefront, RCL, all about earnings. Franklin Resources, Starbucks, and so on. Each of these companies that are up here had the largest increase are going to be earnings, but I do want to take us down to this bottom part again of the S&P 500 because those companies that were hit quite hard are going to be AI related. So we already reviewed NVIDIA. UPS had news that they are losing their Amazon contract. At least half of their business is going away. But PWR and CEG are both big AI related names, electricity related. So what we can do from here is take a look at these stocks and see, are they in a position to recover? This is PWR Quanta Services. Here's that gap down on Monday on that news regarding DeepSeek. You can see the gap down. Now, the stock is wedging higher, but let's take a look at these momentum indicators here, and you'll see that the stock still has a negative RSI that will have to get positive, but also we will need the stock to get back up above that key 50-day simple moving average. That's at 329. And you can see also that the MACD is in negative territory, not even trending sideways or moving close to trending upward. So any of you that are interested in buying the dip, you'll want to be aware of what to be on the lookout to tell you that the stock has entered a new uptrend. CEG would qualify because we did have that huge gap down on Monday, very heavy volume. However, the stock was able to recover this 21-day simple moving average. We do have a positive RSI and a positive MACD. This is one of the names on my MEM suggested holdings list that we did not remove on Monday because the chart remained constructive. So we'll take a look at one other name that is sitting down here that sold off due to the possibility that AI needs would be diminished. And we can see Arista Networks. Now, this is a networking company that is, again, very much involved in data centers, and they provide the networks that are needed. And we can see this big gap down. But here again, we have that nice wedge higher. We are back above that 50-day simple moving average, and we do now have an RSI that's positive. I would like to see that MACD black line up through the red to confirm a new uptrend. So we're not quite out of the woods yet, but again, that's what you're going to want to be on the lookout for if you are interested in looking at these AI names that got hit quite hard. Now, I talked about healthcare. Let's take a look at a couple of stocks in that industry group that are sitting up here quite interestingly. We can take a look at Gilead, GILD, and you will see that the stock is poised for a nice base breakout. Now, we did break out today, pulled back from that, but also of note is this nice upward sloping RSI, nice MACD crossover. So we're sitting up here quite nicely. AMGEN, I mentioned they are due to report their earnings next Tuesday, and you can see we're in the throes of a potential downtrend reversal. We have that MACD just getting into positive territory. RSI is bullish. However, with earnings looming, I would not be a buyer, just given that volatility that we have seen in these companies, that even if they come in above estimates, any kind of disappointing news, and we'll share a couple of names that have gotten hit quite hard. But here we are with Vertex. Now, it's not going to be quite as interesting after this gap down. However, we have filled the gap, and we are now back up above this 200-day simple moving average. The company did get news today that the FDA approved their non-opioid pain medicine, and that is super good news. We have bullish momentum characteristic here as well. Last up is another very innovative company in the biotech space, and they are due to report their earnings on Monday. This is TWST, Twist Bioscience. You can see we had that base breakout pullback, but it's holding up here really quite nicely. So I'll be keeping a close eye on that name as they go into earnings. Let's take a look at a company that I mentioned. There are those that have come out with good numbers, but the markets just really took it out on this name. You can see it's down 20% today, super high volume. And this is Decker's Outdoor, UGG boots, and also Hoka sneakers. And they did show an improvement in their earnings and sales. However, their sales outlook for this year came in just a little below estimates, and the stock was really punished. From here, if you do have a company that comes out with numbers and really has this sharp sell-off, sometimes it can be very helpful to go ahead in and take a look at an intraday. This is a 15-minute price chart, and what you can see is the stock gapping down, but then continuing to trend lower. Should you stay with it or not? In this case, that third bar that is printed beyond that first one, you want to pay attention. It is below the low here, and oftentimes that does signal further potential downside. And also taking a look at companies that are due to report next week. And these are really certainly well-known companies that can impact the markets. Palantir, PLTR had a nice breakout here, nice momentum indicators. The company is very much involved in security. They use AI, and they are very closely tied with the government. They have a number of contracts, so their numbers will be closely watched next week to see if, in fact, they do come out with numbers that help propel them higher. Disney also due to report next week. This is a company that closely watched. You can see we have that MACD just getting into positive territory here. RSI up there in positive territory as well. They are due to report on Wednesday after the markets close. What I did want to do from here is share with you that concept of what I call sympathy trades, where stocks that are also in the footwear apparel space, they too did pull back. This is Birkenstock, did not report earnings, but the stock fell 5% today. Also, another shoe manufacturer, sneaker, ON Holding, and you can see this stock gap down 6% today on Decker's news. And then last up, we can take a look at Skechers, and this too is down about 4%, 3.7. Nice pullback here, however, to this upward trending 10-day simple moving average. And last up, let's take a look at some stocks that are forming the right side of a base. We are seeing a number of companies break out in this market. I talked about that equal weighted S&P 500, and we are seeing a broadening out. Marriott, MAR, just experiencing this base breakout yesterday, pulling back a little from that. Also take a look at ADSK. These are companies, for instance, Autodesk is not due to report for another month. However, they did get analyst upgrades that pushed the stock back up above that 50-day simple moving average, bullish RSI and MACD. So lots of uncertainty, and certainly those AI related names as well. So I would suggest that you keep your stops tight. This point in time, the markets are still in an uptrend. However, you can see that we are seeing a shift and a broadening out, which is good news. However, you will want to be careful going into next week is a very, very busy period for earnings. Have a great weekend. I'll see you here next Friday.